Hello and welcome to this very special show. We are talking about the most important event for many in the market calendar, that is the Union Budget, fiscal 2014. What is likely, what is going to happen, and how our perception is going to be shaped as far as markets go around that. That's the topic of discussion. We've got Anup Maheshwari, Head of Equities and Corporate Strategy at DSP BlackRock Mutual Fund, joining in to help us do that. Anup, thanks very much for your time. Great to have you here. Top down, let's just start with your basic sense. Is this budget important or is it unimportant according to you? Because you can argue it both ways. You can say that a lot will depend on what the government puts out, and you can say a lot has already happened over the last 4 or 5 months or so.
Sure. So traditionally I would have said it's not very important, because typically over many years we've seen the budget becoming just one more point of implementation of the government's program, and a lot of policies were occurring outside of the budget. But clearly in today's context, this budget actually becomes a little more important, simply because we've embarked on a certain process of revitalized reform over the last 3 or 4 months, and clearly with the finance minister indicating very specifically and going around giving investors a lot of comfort on and particularly rating agencies comfort on the fiscal deficit, I think we're all very keen to see exactly how that will be achieved, and whether or how that will be achieved while balancing the other aspects related to growth, making sure we're not stalling the economy in any way. So in that sense, the budget numbers will be very interesting to see. In terms
will be interesting and important, or
interesting and important equally. We won't expect policy to come out from a budget document, really,
right,
because that's part of an ongoing process that they're working on very hard in any case.
Right.
And I'm sure we'll talk about it, but we're very confident of what the government's doing. But the budget itself, I think, is really going to be interesting from a numbers point of view, and just seeing how they'll manage the deficit.
And what is your view as far as the budget is concerned? You think they'll put out good numbers, they'll put out bad numbers, they'll put out okay numbers?
No, our sense is that clearly the government has given a lot of comfort to investors that the budget itself will be a fairly responsible budget. It will starting with the objective of meeting a certain fiscal deficit, they will try and manage. The good thing is the finance minister has already said that he doesn't believe in a higher tax regime, he believes in a wider tax net. So I think that itself is a very strong and good approach. So we're looking at, therefore, the budget, in terms of the widening of the net, maybe covering a larger, higher scope of coverage. They've already mentioned probably a certain section of society may be
taxed at higher rates
more aggressively. So those sort of issues, I'm sure, will hopefully get addressed by the budget. And I think those are perfectly fine and rational things to do. What we'd not like to see, perhaps, is aggressive spending cuts in areas that are required to be spent on.
Okay.
So it's good maybe if you address some subsidy issues, etc., which I guess they're also addressing outside of the budget. But I think the important point will be to not cut expenditure just to show a final number. But net, I would say we're heading into this budget with the view that it will not disappoint. It will continue to be fairly progressive on the lines of what the government has shown over the last 4 or 5 months.
What is the threshold for disappointment going to be? When we're talking broadly, without going into very specific numbers, is nothing new in terms of new schemes, spending schemes, going to be seen as positive, or very aggressive fiscal deficit number for fiscal 14 going to be perceived as positive? And we'll talk about the other angle, which is essentially elections, right? I mean, this is perhaps the last budget before the general elections, and that sure is going to play out as well. What's your sense?
Our sense is it has to be realistic. So typically what the unrealistic part of the budget tends to be the growth expectation plan for the next year. So, you start off with a certain assumption of growth rates and link corporate tax increases, all the taxation increases, direct and indirect taxes, to a certain level of growth. So that has to be realistic to start with. I mean, we have to have a budget that clearly represents the fact that we are in a slightly slower phase of economic growth. Hopefully, will be picking up over the course of the next year, but it has to be a little realistic. We're not clearly going back to a very aggressive rate of GDP growth. So a budget that is balanced in terms of its outlook to start with.
In terms of growth.
In terms of growth, because a lot of the numbers start feeding in.
But last budget, if you sort of remember, the numbers on subsidies, etc., which were put out, were at that time seen as being extremely unreasonable. I mean, at those prices of oil, etc. Now, of course, the government is doing to try and fix the structural issue in a lot of these cases. But what's your sense there? I mean, one is growth and revenue receipt, etc., what the government expects to collect. But what about the other side?
Yeah, as far as the subsidies are concerned, as you mentioned already, and the government has outside of the budget already indicated a program where you have some clarity that the subsidy effect in the budget will only reduce. So in that sense, I think this year's numbers will probably be a little more realistic than last year, where you put in a number but you had no policy backing it up, and you had no view on oil, etc., and it could have gone anywhere really. So we're keen to look at a few things. One is, and this again might be outside of the budget, so they come up with a subsidy number, but the subsidy sharing mechanism, at the end of the day, if you do give oil companies the rises in prices, gas prices as well, will you take some part of that back into the fiscal deficit from a government standpoint? But I don't think the budget is going to address those. Those will probably come post the budget. But as a trend, I think the fact that subsidies will be addressed. As a trend, we're seeing, the very fact this whole direct cash transfer approach that we're likely to see some benefits of maybe next year. All of these will have an effect on the eventual outcome of the budget by the end of its period. So it may be difficult to predict in the budget itself, but all of these I think will support the finance minister's target of trying to control the fiscal deficit. So the subsidies hopefully will surprise us positively by the end of the budget. We won't start off with an unrealistic number in the budget itself. So we actually think there's room for positive surprise on the budget eventually.
By way of numbers that are...
By way of numbers, hopefully. I mean, if all these programs work well, then logically you will be addressing the subsidies more aggressively over the course of the year.
So you're saying what is put out actually and what is actually achieved might surprise?
There's room for a positive surprise, unlike the traditional behavior where, whatever typically is put out is maybe a politically correct number to start with, but turns out to be something else by the end of the budget. So hopefully this year, just given these programs, if they manage to implement it, we may have a situation where at least what is projected in the budget is more realistic and can potentially be lower rather than being higher in terms of subsidies. We're fully cognizant of the fact that we have an election year coming up also next year, so there's always this political balance. But I think that will be an issue more for next year's budget. For now, I think the budget we're at least hoping will be pretty much on the tone and lines set by the finance minister in terms of what he's been doing for the last 3 or 4 months. So this will fit in well with being progressive in that sense.